Hey everyone, welcome to the show. Today I want to walk you through one company that's basically the digital backbone of an entire country, Dialog Axiata, Sri Lanka's biggest telecom operator. It's a great case study honestly. It's not just phone company sells more data plans. There's a major merger in here, a currency crisis, a leadership succession story. It's got everything a strategy nerd could want. So, I'm going to walk through this the way a strategy consultant would: vision and mission first, then the environment they are operating in, competitive strategy, a big M&A move, execution, people and culture, and then we'll close on the money, the actual financial results. 10 slides, 8 strategic lenses. Let's get into it.
First up, vision and mission. Dialog's vision statement is to be the undisputed leader in the provisions of multisensory connectivity, empowering Sri Lankan lives and enterprises. Multisensory connectivity is a pretty loaded phrase for a telecom company. It tells you they don't think of themselves as just a mobile carrier. They are thinking video, voice, data, TV, all of it touching every sense. The mission backs that up too. Technology-enabled connectivity, customer-driven processes, and empowered team. It's very much an internally facing culture statement, not just a customer promise. What's interesting is how consistent this direction has been. They didn't pivot every 2 years chasing trends. It's been a steady march from single service telco to what's basically a national digital infrastructure platform. Mobile, broadband, pay TV, enterprise, plus financial and digital services layered on top. So the vision isn't just a poster on the wall, it's actually mapped to the diversification we'll talk about later. Now, let's talk about the environment they're operating in because it's honestly rough terrain. Sri Lanka went through a serious economic crisis starting around 2022, currency depreciation, high inflation. That squeezes consumer spending on telecom services pretty hard. And it's not like the pressure just vanished. Even into 2024, costs stayed elevated relative to pre-crisis levels, even as FX and inflation started trending in a better direction. On top of that, this is a heavily regulated industry. TRCSL, the Board of Investment, the Stock Exchange, the Central Bank, and major strategic move has to clear all of them. But flip to the internal side and the picture's a lot stronger. We are talking network coverage across 91% of the land area and 99% of the population. Over 20 million subscribers after their big merger. Roaming relationships with more than 650 operators in 200 plus destinations. That's serious moat. Subsea cable, stakes, data centers, billions of dollars of infrastructure investment over the years. The one honest weak spot, some earlier strategic reviews of the company flagged a lack of really formal strategic planning processes and said HR capability needed more investment, worth keeping in mind as we go. Now, let's talk about the environment they are operating in because it's honestly rough terrain. Sri Lanka went through a serious economic crisis starting around 2022. Currency depreciation, high inflation. That squeezes consumer spending on telecom services pretty hard. And it's not like the pressure just vanished. Even into 2024, costs stayed elevated relative to pre-crisis levels, even as FX and inflation started trending in a better direction. On top of that, that is a heavily regulated industry. TRCSL, the Board of Investment, the Stock Exchange, the Central Bank, and major strategic move has to clear all of them. But flip to the internal side and the picture's lot stronger. We are talking network coverage across 91% of the land area and 99% of the population. Over 20 million subscribers after their big merger, roaming relationships with more than 650 operators in 200 plus destinations. That's a serious mode. Subsea cable stakes, data centers, billions of dollars of infrastructure investment over the years. The one honest weak spot, some earlier strategic reviews of the company flagged a lack of really formal strategic planning processes and said HR capability needed more investment, worth keeping in mind as we go. So, how do they actually compete given all that? Four things, really. First, scale and cost leadership, but not through a price war, through consolidation. Instead of grinding it out against a rival for years, they bought them. We'll get to that in a second because that's basically the heading story of this whole analysis. Second, infrastructure differentiation. Fiber, data centers, subsea cables. Being first with the tech lets them charge for quality, not just compete on price. Third is diversification, leaning into finance, pay TV, enterprise services, digital products, so they are not totally hostage to commoditized voice and data pricing. And fourth, which is almost a survival tactic given the economic backdrop, disciplined cost rescaling. Basically, continuously re-optimizing the cost base so margins hold up even when currency and inflation are working against you.
Okay, this is the big one of the Airtel Lanka deal. May 2023, Dialog Axiata Group and Bharti Airtel announced they intend to combine their Sri Lankan operations. That's the starting gun. Almost a year later, April 2024, they signed the actual definitive agreement. Dialog's going to acquire 100% of Airtel Lanka's shares, but through a share swap, not cash. Bharti Airtel ends up owning about 10.355% of Dialog itself. Then, June 2024, the share scale actually completes. That resets the ownership table. Axiata Group at 73.75 and Bharti Airtel at 10.355 and the public holding the reset about 15.9%. And then the final step, August 2024, the legal amalgamation completes. Airtel Lanka stops existing as a separate legal entity. Dialog is the surviving company and their combined subscriber base crosses 20 million. What I want to point out here is the sequencing. This wasn't done in one motion, announce, sign, close, done. It was staged: share sale first, then the legal merger, then network integration rolling out afterward. That's the deliberate way to manage regulatory risk and operational risk instead of trying to do everything at once. And scope wise, this is horizontal consolidation within Sri Lanka, not an overseas expansion play. It's about defending and extending domestic leadership.
So, post merger, you've got that ownership structure we just described. Axiata at 73.75, Bharti Airtel just over 10, public around 16. And underneath the parent company, there's this whole portfolio of subsidiaries: Dialog Broadband Networks, Dialog Television, Digital Holdings Lanka, Dialog Finance PLC, Dialog Business Services, Device Trading, Network Services, First Source Dialog Solutions. What's notable is this is all related diversification. It's not some conglomerate buying a hotel chain and a cement company. Even one of those subsidiaries plugs into the same core connectivity customer base: infrastructure, content, finance, enterprise services, all orbiting the same subscribers, which is a much lower risk way to diversify than jumping into totally unrelated industries. Let's talk leadership because there's an interesting continuity story here. Supun Veerasinghe has been Group CEO since 2017. Before that, he was CEO of Robi Axiata and Chief Strategy Officer at the Axiata Group level, so he came in with real cross-market group experience. The chairman, David Naipakilo, has a long finance and board background across Axiata. And then in January 2025, Vivek Sood joined Dialog's board, and he is simultaneously the group CEO and managing director of the entire Axiata group. That's tight thread between parent and subsidiary strategy right there. And in June 2025, Rekha Veerasurya took over as Group Chief People Officer, having just come back from a secondment at the Axiata Group level, which again tells you people strategy is being coordinated closely with the parent company. Now, culture. The mission statement actually spells this out. Let me read it. An empowered set of dedicated individuals who are driven by an irrepressible desire to work as one toward a common goal in the truest sense of team spirit. It's aspirational, sure, but you can actually see it show up in how they handled the merger. They kept both brands, Dialog and Airtel, running side by side for customers instead of forcing an abrupt switch. And the public messaging was very much welcoming the Airtel team and subscribers into the Dialog family. That's a soft landing integration approach which matters a lot for customer retention and staff morale during a merger. But here's a wrinkle worth flagging. CEO tenure is almost 9 years, so there's a real stability at the very top. But average management team tenure is only about 1.8 years, and average board tenure is 2.2 years. So there's a gap, long-term continuity at the very top, but a lot more churn just below that. That's the kind of thing that's worth watching from a succession planning and culture durability standpoint. Alright, let's get to the numbers. Financial year 2024 core revenue grew 10% year to date to about 151 rupees. EBITDA also grew up 8% to roughly 66 billion. But net profit after tax actually dropped down about 38%, and the big reason is a prior year currency gain that didn't repeat. Strip that out, and the underlying decline was only around 12%. Some other numbers worth knowing: capex to revenue ratio was 18% for the year, operating free cash flow was about 23.6 billion rupees, and Q4 EBITDA margin alone hit 46.3%. And it wasn't just a bottom line for shareholders. They paid about 47.3 billion rupees in taxes to the Sri Lankan government that year. That's meaningful chunk of national revenue coming from one company. Then looking at financial year 2025, revenue climbed further to around 180 billion and net income rebounded to about 21 billion. So the pattern is pretty classic post-merger economics. You eat some integration costs and short-term profit pressure in year one, and then the synergies start showing up in year two.
Okay, let's wrap this up with 5 takeaways. 1. A genuinely stable vision and mission have translated into a consistent strategic direction for 2 decades, from single service telco to full digital platform. 2. The Airtel Lanka merger is the defining move of 2023 and 2024, sequenced, regulation aware, and it reset the competitive structure of the whole market. 3. Related diversification into finance, TV, enterprise, and infrastructure builds resilience against pressure on core telecom margins. 4. 2024 profitability took a hit from integration costs, but 2025 shows the synergies coming through. You next time. And 5. There's a real contrast between long CEO tenure and much shorter management and broad tenure, worth watching as a culture and succession questions. That's a Dialog Axiata strategy very much in immersion. Thanks for watching everyone.